Bitcoin is in a range. Hello and welcome back to the channel. My name is Herve, as you may know, and every other day on this channel is where we bring predictive analysis, research, and tutorials to help guide you through this vast world of coins and tokens. If that is the type of content you are interested in, click the like button and subscribe to the channel with your notifications on so that you do not get to miss any other important video like this one. With that said and done, let's just jump right into the charts. This is Bitcoin on the 3-day time frame. If you look at this previous low right here, and if you just map that out like so, you're taking from the lowest candle close of this fractal and to the highest close right here. This highest close right here, that will give you the range. That will give you this range. So BTC overall is in a range. Now, it is funny to say that it's in a range when we have price collapsing right here. So it's kind of funny to say that, but that's just the thing here. It's in a range. Now, if we go back to the 3-day time frame, we will see that the 3-day stochastic is already in the undervalued region. Now, when it's undervalued, I really do not like pressing for it to crash, because most of the times here, price will rally. When it's in the undervalued region, you can go back to the charts and you'll see the same thing. Price would rally when BTC comes to this region. Now, it does not mean that it cannot still plummet. It can, because as I always say, this can stay undervalued for a very long time. So when it's undervalued like this, now this stochastic moves faster than the RSI, so you'd start expecting price to bounce anywhere around any support right here when you see the stochastic in the undervalued region. So it adds more confluence to the narrative you might have. If you think price is going to go to the upside, you should be watching for the stochastic on the 3-day time frame and on the daily time frame. If they are both undervalued, there is a strong chance that you would be expecting a bounce back to the upside. How far that will go to the upside, we may not know. Let's just go right on. Now, if we go back now to this chart right here, let's take these out and then we start from the weekly time frame. We will see an inverse head and shoulders pattern. Now, I was talking about this on TikTok yesterday, where I said that inverse head and shoulders patterns usually would provoke people to go long or invest, targeting the inverse head and shoulders. So you would see a structure that looks like so and comes back to this now is the neckline. Yeah, now if you close this here, this would be an Adam and Eve pattern, but if you come back like so and you break to here, that gives you the inverse head and shoulders. The inverse head and shoulders right here, what I was saying on TikTok is that when you see an inverse head and shoulders right here, be very cautious, because a lot of people will take positions right here and put their stop losses around here. So coming back here will invalidate the inverse head and shoulders, because inverse head and shoulders are corrective, so they are there to reverse a downtrend. You'd find price coming down like so, and then you find this type of structure. This type of structure indicates to you that price is about to reverse the downtrend. So they are trend reversal patterns. If you find it to the upside, that will be a head and shoulders, and it is reversing the uptrend. So it's a trend reversal pattern to the upside, and that we can see right here. So this right here is the head and shoulders pattern, and this is reversing the uptrend. Yeah, and this is something which also adds to my idea of Bitcoin going to $3,000, because the uptrend comes from down here. So if it reverses the uptrend, that is reversing this structure. So you would find it going like so, this structure, which is an ascending broadening wedge. So price has to go to the ultimate target of the ascending broadening wedge, is the lowest point of the wedge, which is down here, and that gives us $3,000. Now, even from here to around here, if you take your measurement, this will also be giving you $3,000. Somewhere around here. I'm not doing that so perfectly, but that will also be giving you somewhere around $3,000. There are a lot of things that point to $3,000, and God forbid that we just plummet from here to there, because a lot of people are going to cry basically. So all right, let's come back here. Okay, so that's basically how inverse head and shoulders or head and shoulders patterns work. Yeah, so the reverse downtrends and reverse uptrends, they are trend reversal patterns. Now this is the what you'd call the retail way of looking at it. Yeah, anybody who is in the market or who saw this or who has learnt about inverse or head and shoulders would think that this would immediately just go to the upside. So instead of waiting for any type of confirmation, they would immediately jump right in. Now, that does not mean that they are wrong. Yeah, they may as well be very correct, and price actually goes to the upside. Some of the times it will just shoot right up. But sometimes I find that price would like to come back down here, retrace this low right here, before continuing the move to the upside. So when it's coming back down here, actually it will be confirming this double top if it does closes a candle below the neckline of the double top right here. So you have two structures on this chart. You have an inverse head and shoulders, and you have a double top. So this is your double top. Yes, so this is your double top. If price does come down from this region right here, that will be your double top, and all of them do have neckline. So the neckline of your double top is this region right here. Closing a candle below here is confirming the double top. Closing candles below above this line up here is confirming your inverse head and shoulders. Now note that I'm saying closing, and by closing I'm talking about if you actually want to catch this move right here, you would want a close and a confirmation candle. If you want to catch this move right here, you also want a close and a confirmation candle. Yeah, and it's better to do that on the 4-hourly time frame or daily time frame. Patterns are powerful on higher time frames, not on lower time frames. They can easily reverse on lower time frames, like the 1-hourly or below. They can easily reverse from there. To use them on the 1-hourly or below, you need strong confirmations with your Fibonacci retracements or your trend-based fib right here. You need these two, or only the trend-based fib, to use them on the lower time frames. Now, what this type of structure is exactly what we see happening right here. We see, let's take these out. No, we'll leave it there so that we can use it also to explain. So we see the same type of structure happening here. We have our, let's take this one. So we have the head and shoulder. So we have the first shoulder right here. We have the head right here. We have the second shoulder right here. So that now is the inverse head and shoulder. So if we take that opposite like so, you will see the head, left shoulder, and right shoulder. So if you take it back like so, and then you will see it happening now like this. Now when BTC went to 25k right here, a lot of people got bullish. This also ties with my theory of understanding inverse or head and shoulders patterns. When BTC went up here, a lot of people got bullish, so people bought into the markets, and some people went long on the markets. Now their stop losses will be down here, as explained in this example. Their stop losses will be down here, so you would expect that there will be a good pocket of liquidity around this region right here. So that good pocket of liquidity has been wiped out by price coming back down to this region. So right now price has come back to retrace this liquidity that was down here. But of course, price has closed some candles below here, because this right here is on the weekly time frame, and you still see price down here. This means that on the lower time frames like the daily or 4 hourly, there will be some candle closes down here, which means this was a confirmed move of the double top. This double top that we talked about right here, there has been a confirmation of the double top. Now that also means that price will be headed for the target of that double top. Okay, if we go now to the daily time frame right here, we'll see that the stochastic is in the undervalued region. Being in the undervalued also means that be careful. That's like a signal that be careful. This thing could reverse at any moment. That's what the stochastic is basically telling us. Now this measures momentum, yeah? When it falls below this 20 region right here, around this 20 region, you know that the asset is undervalued. And that could easily bring about a reversal in price action. So you could easily find price make some type of recovery here and head higher. However, this is just a probability. It's not any type of must, or so you can still find it stay there for a very long time and price continues to plummet. It's just like you can also find it in the overvalued, dangling around the overvalued region right here, and price continues to go to the upside. So just keep that in mind. So in the other video, we were talking about this region right here where price does not have to break if it should continue the move to the upside, and we had a certain target here. Let's take the head and shoulders out. We had this I think that was $21,700, which we said price does not have to break somewhere around here if it had to continue the move to the upside around this region right here. Let's not waste time with that. So we said if price did break this region right here, there is a very high chance that it will be headed for about 18,000. Let's go to the 4 hourly and have a good measurement right there. So on the 4 hourly time frame, we can see the region. So if we take from this highest close right here, and if we even just take this one to the lowest candle close right here, that should give us a more precise target. So more precise target will be coming from this one, and we put from where it broke to the downside around here. That's giving us roughly 18,500. So we did say that breaking this region right here will be pushing us to around 18,000. Yeah. Now, so that is where this should be headed. That is where this should be headed, and we are going to see if this will hold that region or not. Now that 18,000-ish region, and from this particular chart, this is giving us somewhere around 18,500. Now note that I am not taking the exact figure, because taking the exact figure will mean some time. So if we take from this range that I was talking about right here, take from the candle close there, and we take from this other candle close here, now we see that this candle close here, this one right here, is where price bounced off of when it went to the upside right here. So this is where price kind of bounced off of when it went to the upside right here, and when it broke out of it, it confirmed the double bottom, then it headed to the upside. Now, so we will hope to see that price does hold this region when it comes to the downside. So by thinking this way, we should expect to see some sort of fractal in the lower time frames that shows to us that price can come down to this region. So if we go to the say 4 hourly, let's see if we will have anything on the 4 hourly. On the 4 hourly, we are having something that looks more like a bear pennant. So if we take from here to the lowest point here, and let's just say price broke down from this region, it will put us around the same target of this structure from up here. So bear pennants are bearish continuation patterns, so they continue to move to the downside, and their continuation should lead you to the ultimate target of the fractal that you broke down from. So we broke down from this double top right here, the bear pennant forming right here should be leading us to the ultimate target of this double top. Now that simply tells us that price should be retracing around this region. Not retracing this region will be confirming something completely different, and we will see what that thing will be in a moment. Now if we go down to here, if we go back to the weekly time frame, and I know anybody watching this channel is familiar with this chart. If we go to the weekly time frame and we take a trend line from this bottom right here in 2018 and we take it through the close of the pandemic drop right here, so we're taking it through that close right here, then we will see something happening that seems interesting to us. We see that this 18,000 region is close to that mega support from 2018. This mega support. Now here's where things get interesting. If you take this line right here, that's from the all-time high close, and you put it to this lowest close right here. Now where it could have broken down from that fractal right here, you put your line, that will be leading you to 3,000. Now that is where things get pretty much interesting here, because this line, this will be taking you back to your pandemic drop right here. So it will be taking you back to this drop, to this region. That's where you would want it to move back to the upside. Now if you haven't watched my video on Bitcoin to 3K, I will leave the link down in the description, because 3K will be confirming something which we have talked about, because we talked about the diminishing returns, and we also talked about the decreasing bottoms as we move to the upside. So 3K will be going out of that structure, out of the price structure. That's the price movement, the decreasing tops and decreasing bottoms. 3K will be going out of that, and we think that we are under the inclination that we are actually following some sort of symmetrical triangle. So the first exit of the symmetrical triangle is the wrong one. That wrong one that will be going to 3K price wise will be this exit right here. So going to 3K will be the wrong exit, because it's been having decreasing tops and decreasing bottoms, which means it has to have some sort of explosion in the future. The first side that it exits this type of price structure will be the wrong side. 3K will be the wrong side. If it goes to the upside, it should end somewhere at about 70K, which you can understand from my video on Bitcoin price history. I'll just leave the links in the description so that you can understand what I'm talking about. So as we can see from here, we should have at least some sort of bounce at this region. If we do plummet from here, which I think we will most likely come down here, we should at least have some sort of bounce from this region. Now a bounce from this region could lead us back to this zone right here, because we can see that the charts are saying it. Yeah, we can see zones of support and resistance here, and they are very clear. So if price actually comes back down to this 18K ish region, we should have some sort of bounce that should take us back at least to like $20,000. Except there was some crazy black swan that just took us right down and broke this support right here. Now breaking the support is not really a problem. Closing a weekly candle below this support, that will be the problem, because closing a weekly candle right here and closing another weekly candle which confirms the breakdown will be really bad. Now does that mean that it will just take us straight to 3,000? No. Why will it not just take us to 3K is because if we come back to the daily time frame right here, then we can see some very interesting things. This structure, this one right here, from the all-time high is still above the support. Oh, that's not the all-time high. From the all-time high is still above this downward sloping trend line. So the downward sloping trend line is actually acting as support right now. You can see that price is trying to bounce off of it and go back to the upside. Given that the stochastic RSI right here is in the undervalued region, it stands the chance of bouncing right there. But this is on the daily time frame, and on the 4-hourly time frame we can see an overvalued stochastic. Where is it? All right, so on the 4-hourly time frame we can see an overvalued stochastic, which means we should be expecting some sort of price decline before we see any type of bounce. And what I think is trying to unfold here is a possible double bottom. So if price actually comes right up here and goes back down like so, that will be giving you the double bottom to push you to the upside. Now, why do I think this can still come up here is because if you zoom in to this particular structure, you will see that that in itself is a double bottom. That in itself is a double bottom that could take you anywhere to about 21,300. So what we can see from here is that this is its own double bottom, which is also an ascending triangle. So the ascending triangle looks more like so, which is also a bullish pattern. Now with bullish patterns, I always expect the wrong side first. The wrong side for this type of structure will be like so, then like so, and like so for this type of structure. That's what I would expect for this type of structure. So I would expect that it goes somewhere to 21,300, and to if you take the measurement from here, just from here or even from here, and you put right up here, that's giving you 21,300 and 388. So if you take from this candle, this particular candle, and you put right up here, that's hitting your 0.382 Fibonacci. For it to not continue to the upside, or for it to continue to the upside, it will have to take out this particular Fibonacci, this 0.236 Fib. If it takes that one out or closes any candle outside here, it's going to shoot right up. So it doesn't have to do that if it's going to still come back to the downside. That's how you can place a stop loss on the trade or whatever. So so long as it's within these Fibonacci golden ratios, it's not going to go to the upside. Closing a candle here will easily push it back up, and it can even extend to this region, to the 23K region. So that's just how you can manage risk. Now, my opinion is it comes up to at least the 21,000 region and then plummets back down to 18K. It can still do something that looks like this and come back to 18, somewhere around 18K, before we see if it's going to hold. If it's going to hold the 18K region, then we can actually have something interesting that will happen. Now, 18K region is below the downsloping trend line from the all-time high. So even at 18K, it doesn't have to close a daily candle, or say 2 daily candles below the 18K region, because that will be confirming defeat from coming outside of this downward sloping trend line. That's the resistance. So if it came back down to 18K, it should pick off from there and go back to the upside in case we are going to see some sort of reversal in the downward price action. So that is what I would expect from this type of price structure. Now, Just looking at this from here, we can see that this is actually looking like a bullish type of chart, because this is a bull pennant. That's it's kind of a crazy bull pennant, but it really does look like a bull pennant. So if it did ever come below or came to like 18K right here and went above this trend line, this downward sloping trend line, it could easily be coming back up even to 24K right here and head higher. So that's what we will keep an eye out for. But that's just how the charts are playing out right now. Now, there is also something that I wanted to point out to you so that you see. So we have this structure playing out here. Now, if we come right here and we take our trend-based Fib, let's just take all of this out. If we take our trend-based Fib from this lowest closing candle right here, this lowest candle right here, and we take it to the top closing candle right here, you'd find something interesting happening, and which is something it's like a cheat code that you can use. When you see price rallying heavily to the upside and closes, then starts to crash back to the downside, the highest possible zone where price will retrace from will be the 0.618 golden ratio. Now I find that price retraces from this particular region, that's the 0.618 to the 0.5. So if you take your Fibonacci from this lowest candle right here and take it up to the highest closing candle right here, you have a very high chance of price coming back down to the 0.618 to retrace from there before heading to the upside. These are just probabilities. Again, these are just probabilities, but most of the times you would find price doing this type of move. Even here, you can also find that price is rejecting the 0.382 Fib before heading back to the upside. So you find a lot of confluences, especially like with here, you would find the bounce here, you also see the bounce here, and you can find that price is struggling to break above the 0.236 golden ratio right here before heading higher. You can even find the bounce here, then a close below that will bring it back down to this region. So you can always find price consolidating below these golden ratios before moving higher or lower, and according to this particular move, you would need that price actually retraces from the 0.618 golden ratio before continuing higher. But according to the charts, you want price to come again to 18K and change, 18K 5, 18K 8, or 18K 4. That was my analysis for the 18K target. Now usually I would want to see price retrace from a particular golden ratio which I have as a target. So for example, if I have this, let's just take all of this out again so that it's clearer. Now I have this right here, we have the ascending wedge, yeah? So we have the ascending wedge like so. And I am measuring the target from here to here, and I put to the downside like so. Now I would want that this line that I drew like so, which is my measurement, should be pointed, if we are going to take like here. All right, now I would want that this my measurement should be pointed exactly at a particular golden ratio. I mean exactly. If it's not exact, then I'm not confident in price holding here, or it could go there then retrace, but I would want it to be exact like so. If it's pointing exactly like so, then that gets me convinced that there is a high chance price will bounce off of that golden ratio. If it was like so, then I am also convinced that it will be bouncing off of my 0.618 golden pocket. Or if it's like so, then I am also in the inclination that price will be headed to this particular golden ratio right here, which is 100% retracement. Now the 1 fib is 100% retracement of any fractal. So closing below this zone right here, if we have candles closing below this golden pocket right here, I will be under the inclination that price is headed for this 14K level. Now we know that the 14K level will also be invalidating a lot of moves to the upside, as that will be below the line taken from the pandemic low right here. So you see how my mind activates targets given a certain price movement. So we were talking, this is on the daily time frame, so it will not be exact as we saw on the weekly time frame. It would be somewhat like so. So if it's coming back down below here, we will be expecting that either it goes back up from here. If it goes back up from here, then you know that this would be a possible zone to accumulate BTC. Now, according to Fibonacci, there should be a pocket of liquidity around this region right here. And my suspect is people would have gotten in the bottom, in the 15K bottom, and put their stop losses around this region. So Fibonacci is saying that around this region you will have a lot of liquidity. So maybe liquidity from, say, buy orders, or so you would have a lot of liquidity, or say stop losses around here. Now if price did retrace and is coming again to the downside, it will be coming to the 1.618 right here, which is another zone that Fibonacci is saying that there will be some liquidity in. So as price closes any of these Fibonacci levels, it tells you where the next target might be. If it did close any daily candle right here and confirmed it, I will be under the inclination that this is going to head to around 14K. So you have a lot of fractals coming into play around this 18K region. What is going on? We have here the, let's do that on the weekly time frame so that we have exact targets. Now we take from the ray right here and we put that here. Now that's the first trend line. We take from here and we also put like so, and that's our second trend line. But you see something important happening around this region. We have the upward sloping trend line from the pandemic low right here, and we also have the downward sloping trend line from the all-time high. So this is a pivotal point for Bitcoin to prove to us that it's going to either just crash or it's going to go to the upside. And there are some points there to say that it's going to crash. So be mentally prepared for whatever scenario is going to play out. But for now, my inclination is that there should be some type of bounce at 18K ish, because the drop down from this double top, which we have talked about already, I don't want to put all those lines here, but the drop down from this double top is pointing us to the 18K region. Now, usually you would find that every symmetrical triangle would have the wrong side broken out first. But even the wrong side that has been broken out first will meet the first target of the symmetrical triangle. Now, the first target of this symmetrical triangle will be taking us up, not to be too exact here so that we spend less time, will be taking us up to around 30,000, 31,900 if measured correctly. Let's not waste too much time. But of course, it does not mean that it has to go there. It must go there. It may as well not reach the target before reversing. But it is most of the times you would want price to take the wrong move first. It doesn't mean that it will not continue up. It can still continue, but most of the times in a symmetrical triangle, you will have the wrong side violated first. So if it's going like so, first side that takes out most of the times will be the wrong side, and you will have this. If you had it do this and go like so, and came down like so, the first side will easily be the wrong side and you find it do this. And that is why people will say patterns are for retail investors, because most people are taught that when this goes like so and starts to do this, it's just going to shoot up. So a lot of people come to buy because they think it's just going to continue this entire fractal, or people just come to sell because they think it's just going to continue the entire fractal to go to the downside. Yeah, so basically that's how symmetrical triangles work. But of course it's always better to play it safe. Yeah, never be completely out of the market and never be completely in the market, except this thing is meeting your ultimate target. If it meets your ultimate target, well, I would go all in. Like for example, if this thing went to 3k, I will be left with no option than to be all in. Yeah, so that is the case for now. So that these are the cases, these are the levels that this thing will be headed for if it's going to the downside. Now we have a figure here of 4,650, which does not really coincide with our 3k target, but it's close to it. If we are to measure this thing to the upside, where would it go? So if we were to measure from the upside narrative, then we are looking from here and down to this other region right here, this other, the lowest close right here. So it's easy to say that if this thing bounced off of here and it's headed to the upside, so it's very simple. You can just take from here and you put right here, which will be giving you somewhere around $32,000. And if you even cloned that to the downside right here, it should be taking you to somewhere around $13,000, which is close to your 14k target, to the 14k target we talked about before. It's close to this target right here. Yeah, it's close to this target right here. Now this is something important that we should know. It's always good to take your profits before reaching your targets, and it's always good to invest before reaching your investment target. So if we are targeting $3,000, for example, and this thing goes to 7,000, or say it goes to 5,000 or 4,000, and you wanted to invest, it's always good to invest before it hits that target. If you expect that it's going to 30,000, like in this case right up here, then it's always good to take your profits before it went to the exact target. If you take a trend-based Fibonacci retracement tool from here and you take it to this highest pivot, at 25,200, that's the first pivot. You want to calculate the move of this entire fractal right here down to this lowest point right here at about 15,400. Now we got this target, by the way, on IG, on Instagram. If you are not following me on Instagram, or if you want to follow me on Instagram, I'll leave the link in the description so that you do that. Now this is telling us that the 1.618 to the upside is $27,000, which means $27,000 will be a very hard price point to break if we are heading to the upside. Now, why do I say this? I say this because if BTC, for example, if maybe something happened, or if this thing actually took off and it's going to the upside, a lot of people are going to buy if this thing crosses the $25,300 mark. So a lot of people are going to buy if this thing crosses this region. A lot of people. I mean, even seasoned bears will buy if this thing crosses this $25,300 mark. But Fibonacci is trying to tell us that if this thing crosses $25,300 mark, be very careful with the $27,000 mark, because it might as well go up like so and plummet right back down to 3,000. Very easy. So it's something that we have to have in mind. It's a very important point. Now that will bring about the max pain that everyone will feel, because it will trap the most people if it went above here. I mean, if I was a market maker, that's what I would do. I will take it from here, go right up here, form something like a bull flag, and whilst everyone anticipates that this thing is going to take them to the moon, I plummet. Now that will be the best double top to plummet from. Yeah, so this is the point where we should be extremely careful of if this thing ever wanted to go to the upside instead. I say this because we're in a moment where there's a lot of uncertainty, and a lot of traders and investors are just completely uncertain on where to put their money. A lot of people are running to crypto, some people are buying gold, some are just holding physical cash. But everyone, we'll say 99% of everyone in crypto, will be happy to buy BTC when it crosses this level right here. Now that will be where I think the trap can actually come. Trapping people here at 25k, at 24k, that's not really a trap, because even seasoned almost everybody thought it's not just going to go above the 25k mark. Yeah, but I think that's where the max pain will be. If it plummets down to 14k right here, that's another point that we in this channel should think a reversal can come from. So as it continues to go to the downside, we know the levels that can bring about a reversal. 11,000 maximum accumulation zone will be between $12,000 to $9,000. That's the zone of maximum accumulation. So about 30% of your capital should go in this zone alone. So in this zone alone, not financial advice, of course, just edutainment. 30% of capital should go into this zone alone, but up here you should have at least 50%, in my opinion, of course, 50% in the market, because this thing could just as well do something like this. Remember that we have the hash ribbon right here. So this is your hash ribbon, and on the daily time frame, the hash ribbon indicator may not be so accurate, but on the weekly time frame, it is deadly accurate. We can argue that we are not in the right economic conditions to go in the bull market, to go for a bull market. We are not in this, we are not in that. But the charts are kind of crazy sometimes, so it's good to listen to them. You can see where the hash ribbon indicator has always said buy. You can see it for yourself. Of course, there could be a drop like this, but after that drop, you'd be happy that you even bought the top around this region right here, because if you didn't buy, you don't know if this thing is going to take off to the upside before you start thinking of buying right here or here. You'd see another drop here and think, oh, it's just going to do like this, so I wait. And you will wait right up to here. That is the reason why I am buying, even though I think it can go to 3,000. I allocate some capital for the various scenarios. I mean, at the end of the day, sometimes I'll see people in my videos be like, you'd say two sides so that whatever side you say, you will be right. And that's exactly the point. That's why you are in this market. You want to be right all the times. You cannot be right all the times, but you want to be right all the times. You want to make gains. So overall, you are targeting both scenarios so that you are right, whatever the case might be. If you buy around this $18,000 zone and it goes up to 30,000, you might take some profit because you think this thing could fulfill that first target that we talked about earlier and then drop back down to the level which you think it could ultimately go, around the 3K level. So you are not selling out completely, but you are only taking some profits. Now it's actually rallying up as we speak. You're only taking some profits. So overall, you are playing the markets than let the markets play you. If you buy here and it plummets, you do not sell. If you have bought your asset, we are in a bear market. It can take 10 years. But so far as you know that you are buying what you think is good, you think this is a good project, I am investing in it, you are not selling. You are not selling until you are in profits. That's the principle of bear market. In the bull market, you put stop losses to what you buy. So if you buy here and it starts to go to the downside, you have say a certain percentage that you are willing to lose in the bull market. But we are in a bear market, and whether we are going to 3K or what level, or even if we're dropping down to 14,000, if we drop down here, we can easily recover after that drop in a week. So if you sell here and it drops down, if it drops down to, say, if you buy somewhere around here and it drops by 5% and you decide to sell, you say, oh, I'm not going to take the loss, and it went down to 3, or say it went down to, say, 16,000, and you decide to buy, it might continue to drop and you sell again, and it goes to the downside and you sell again, and you simply are just losing. Don't do that. At least in my opinion, that's not what I would do. If I buy, I just hold. At 60K right here, I think a lot of people would wish that they had bought somewhere around 11,000. Well, if you bought at 11,000, Mr. BTC would have dropped. If you bought right here at 11,800, Mr. BTC would have dropped to 9,800, and you would have been in a 16% loss. Now, normally some people would have sold at this particular region. If you sold, my friend, if you sold, then you would have sold the absolute rocket that you would have sold here, and Mr. BTC would take off. And then you will lose the entire rally. You would go up here and buy, and as it starts to plummet, you are like, oh, maybe it's going to drop now. Maybe the same pandemic drop, maybe it's going to happen. And then you sell again, and you keep averaging into losses. So what I would do is, if I buy here, I buy with a certain amount of my capital, and I allocate some other capital to buy in case it comes down here. I also allocate another capital in case it goes to another region here. That's just how this thing works. But even though you are doing that, you have major targets in higher time frames, like in the weekly time frame. Because from where I sit now, I have investment ready to be deployed in case this thing goes to 7,000, which I saw right from up here, or to 3,000 right down here. And that capital will be in that position. But at least I have enough capital in case this thing goes to the upside, because we really do not know what might happen. For all we know, this thing could just go to 100,000 tomorrow. Bitcoin is not the stock market. It's not the Nasdaq. It's not the US market. Bitcoin is a decentralized form of money. It's a decentralized currency. It can be influenced by South Africa, it can be influenced by Russia, it can be influenced by China, it can be influenced by any country, by anybody. So whether America is in a crisis does not directly mean, well, of course, most of the times it does mean, but it does not directly mean that BTC must plummet. No, it's not a must. That's why sometimes you would hear bad news in the US, and BTC instead goes to the upside. BTC is not only influenced by the United States. If China, for example, which they will not, let's just take a crazy example. If China tomorrow woke up and discovered that, well, the US has serious problems with BTC, and let's say China and Russia, the BRICS basically, if they decided to back their new currency with BTC, or say they also had BTC as part of the commodities that they wanted to back their new currencies with, BTC will shoot to the upside regardless of what is happening in the US. So that is where we have to be careful. We have to know that regardless of what is happening in the US or what is happening anywhere, BTC can be extremely unpredictable, especially if you are only using fundamental analysis. Anything can influence its price regardless of geography. All right, ladies and gentlemen, I know it was a very long video, but I just wanted to share my thoughts on the charts, where I think price could go, what levels we should be looking at. I will be preparing another research video for the channel very soon. So if you did enjoy the video, please give it a like and a subscribe. It does help the channel. If you are wondering where to buy or sell your Bitcoin or buy any other cryptocurrency for that matter, use the link in the description. They are affiliate links, so I do have a commission from you using the link. You'd also have discounts in using the link with trading fees, so it benefits both of us. All right, thanks so much for watching the video. I will see you in the next one, and until then, stay safe.